In this session, let us understand what is bank guarantee, its meaning, purpose and nature. First, let's get into the meaning of guarantee. Guarantee is basically a contract to perform the promise and to discharge the liability of a third person in case of a default. And this is what we have in section 126 of Indian Contract Act 1872. So, guarantee is basically a contract where you are going to perform the promise because you have made a promise that if third party is not going to perform, then you would perform. Okay, so it's basically a contract to perform and discharge the liability of a third person in case of a default. So who are the parties involved in bank guarantee? Basically there are three parties. One is applicant, two is beneficiary and three is guarantor. Applicant will be bank's customer. Beneficiary is the person in whose favor bank guarantee has been created, or say the guarantee is given, and guarantor is generally banker. Now let us also understand the nature of this contract, that is guarantee. Whether this contract for guarantee is a primary contract, answer is no. The nature of guarantees are collateral. It means they are consequential to the main contract between the applicant and beneficiary. It means there will be a contract between applicant and beneficiary, say for some exchange of goods or for rendering of services or for some fulfillment of promises. And if that contract is not executed, then this guarantee contract comes into picture. That's why we say guarantee is collateral in nature. Now let's say bank is going to give guarantee in favor of a beneficiary on request by applicant. What is the risk bank has with regard to guarantee? See, risk arises in the event of default by applicant. That is, applicant is supposed to perform some promise or make some action and he is not doing that. Then if the default is brought to the notice by beneficiary, then the guarantor should perform the promise. But if the guarantee is given by the bank, then bank will not perform the promise. Rather, bank will compensate the loss that was suffered by beneficiary on account of non-performance or non-fulfillment of promise, and this compensation by the banker will be restricted to originally guaranteed amount. So understand, very important. Okay, in the event of default by applicant, the default has to be brought to the notice by beneficiary to the guarantor, and guarantor is only going to compensate the loss. Okay, it's not that guarantor is going to perform the promise here when bank is a guarantor. Understand that. Okay, also understand, when beneficiary makes claim to the guarantor, that scenario we call as invocation of guarantee.
Are you struggling in understanding banking credit related matters like financial ratio analysis, cash flow and fund flow analysis, fund-based and non-fund-based products, term loan appraisal? Then this course is for you. Banking credit analysis process. Enroll now. More details in description below.